Okay, so on the 4-hour time frame, we have a break of structure with the close and the candle looks impulsive and strong. This is my draw on liquidity. This bearish candlestick's low. We drop to the 5-minute time frame. We can see that price is moving pretty correctively. We have a bearish order block. We have a break of structure, and then we have bearish fair value gap in this region here just to show momentum. Now we're on the 1-minute time frame, and let's see if price will go back to that bearish order block that I marked in green before it can go down to the drawn liquidity. But it's all about letting the market tell you the story and lead you. Don't try to fight the market. Let's play it back and see what happens. Okay, now we have a pretty aggressive move into that order block. We have market structure shift here, a bullish market structure shift with an actual close above it. That's displacement. And in these regions you can see that we have multiple fair value gaps, fair value gap here, fair value gap here. That shows momentum. And we also have a bullish engulfing candlestick, a bullish engulfing after this low was swept. So the momentum is looking like it's going upward, but we're still open-minded. Let's see what the market says. Okay, now this is an interesting scenario already. What we have is price sitting in this bullish fair value gap. That's a bullish fair value gap. Price swept this low. It didn't close below it. It swept this candle's low. So naturally, the drawn liquidity is going to be this candlestick's high. If price is to go to this high, which means that price already has momentum to push back into that order block. So I might take a trade back into that order block. Why? Because here's what I have. Price sweeping this low without a close. I have price create and bullish engulfing candlestick, a new order block, and I have this momentum candle from this low to that high. You can see how big it is. That's a momentum candle. I have a market structure shift with the close going into that order block and pushing downwards. I have price coming into this fair value gap, and I also have it. I also see it leave a wick below this candlestick's low, creating a pin bar. So buyers might be taking charge now. So we'll be aiming for upside, potentially going back into this order block, and we're just going to be entering a simple trade, targeting 1 to 3. Place an order on the high of the pin bar. Place your stop loss at its low. Target at 1 to 3, or we just enter targeting the swing high. Let's play back and see how it went. Boom. Okay, so take profit was hit. So now let's see how this order block held. Let's go back to the 5-minute time frame, the higher time frame. So now we're on the 5-minute time frame. Let's see what kind of candlesticks form around that order block. Okay, soon after that, you can see price created a huge candlestick leaving that order block. It failed to close above it. You can see that. So this candlestick wick that went above it, that's the trade that we took. Is the bullish move that we took. And then it swept that high below that candlestick's low, this one. So I think it's safe to say price is going to be targeting the drawn liquidity, this blue line. This was the drawn liquidity that I showed you earlier. So to enter a trade, you would have entered on an unfair risk to reward ratio. You would have had to place your entry there, put your stop loss right above there, and then target that drawn liquidity. And look at it. It's a 1-to-1 risk to reward ratio. Is that worth taking? Yes, but according to my strategy, it's not worth taking. So I had to let this one run. Boom, TP was hit. So either way, I got my trade for the day, and then I'm out. Thank you guys for watching. See you next week, Monday.